You've talked about what entrepreneurs can do to help themselves, but what could the government be doing to support SMEs?
My view of government is that they should stay as much away from businesses as possible, but that doesn't mean that they shouldn't have a role. So let's take first access to finance. There are some great success stories in the UK. The Enterprise Finance Guarantee Scheme has been quite successful, has been oversubscribed. This is basically a scheme that allows firms to have a guarantee backed by the state, by the sovereign state, in this case the United Kingdom, that will be presented to banks, and that would reduce the risk of the banks, and therefore the banks will either agree to give a loan or give such loan at a lower rate or at a more convenient rate, allowing the businesses to thrive and to invest into productive activities. This is a great idea. Unfortunately, the firepower that has been given to this measure is very, very small. It is in the pre-budget document I read 500 million. 500 million of guarantees. It's a drop in the ocean in such a big economy like the UK. Let me give you a comparison. Similar scheme like OSEO in France or the Fondo Garanzia in Italy, they range in the billions. That's, of course, that is for debt. But there are also possibility where the state or the government can help to improve access to finance in terms of risk capital, i.e. equity. And in that respect, the UK has been quite innovative, creating the instrumentation. But I believe that, again, there was a lack of ambition on doing it on a much bigger scale, because good ideas, they need the firepower in order to have the impact. In terms of reducing the red tape, I believe that this is something that it's not easy, and it involves a change of mentality and a change of mindset, especially in all the bureaucracy that is around governments, not only central government, also local governments, and all sorts of agencies that are surrounding businesses. And the reality is that it is really unfair for small businesses having all these procedures that are very similar to the bigger businesses, I mean. It is something that it is very, very difficult to cope. Many times it requires competence that they don't have, and therefore they have to buy on the market. And for a business that is many, many, many times smaller than the equivalent one in a bigger size. Last but not least, reducing taxation. Businesses, they live or profit. Small businesses, at the end of the day, in many cases, they don't pay themselves a salary. They look at the profit as a way to pay their living cost, and it's the base of the wealth of small businesses that many times are family businesses. Having such big tax burden, and by reading the budgets and by looking at the deficits of this country, it can only get worse. It is something that we need to take in account, because that could be detrimental versus not only the creation of new firms, but also the stimulation of the growth of existing ones.
For those entrepreneurs who do want to attract investment, what options are available to them?
Well, it is really tough. But I believe that small businesses, the one that they'd like to grow, as we said before, will eventually find finance and people to back them up. But there are some conditions to be in place, and there is some mindset as well to be in place. The first condition to be in place is that businesses, they have to start to try to have clear plans with clear objectives. The objective needs to have a level of ambition, perhaps not too stretched, because in today's economy and in today's context, it's difficult to have a very ambitious objective, but they need to have plans with clear goals, with clear objective, with milestones, because this is a precondition to then go to a bank, go to investors, to have a constructive discussion. But that's not sufficient. The second part of any business, which goes into how to achieve those plans and how to achieve those goals, is to have a clear, transparent system of reporting, as well as monitoring of the progress of the business. This might sound trivial, and it might sound a little bit academic, but the reality is that banks, investors, they need to have the comfort of following the business closely with the business owner, with the entrepreneur, not only to say, to see signs of problem, but also to perhaps help and perhaps give advice and perhaps warn the entrepreneur that the route that is undertaking is not the correct one. Do not be afraid of going to banks and shop around and try to find a bank manager that will understand the business, that they see the potential. Let's remind ourselves that the business of banks is lending money. As a butcher, his business is to sell meat. For a bank, his business is to sell money. If you decided to be an entrepreneur and if you decided to run your own business, you also need to, in particular in this moment, to show that you're really committed to it. So top-ups, personal injection of finance in terms of equity in the business, it is essential to show to investors and to show to banks that you really believe in the business and that you believe that this business will come out of the crisis healthier and stronger, and that I believe it is very, very important. And that could be coupled with external investors that they follow you on your investment. And I saw recently a number of small businesses adding up equity capital by way of personal injection of the owners or the shareholders, as well as inviting external shareholders. Last but not least, if the debt situation, if the financing situation of the firm, it's already very heavy, charged or with a high load of debt, entrepreneurs should not be afraid of taking the situation and go through a deep restructuring. Procrastinating in a situation where the debt is not sustainable will kill the company eventually. Therefore, it's very, very important that entrepreneurs and their advisor, if they see that the situation is not sustainable, to go through a restructuring. That may, in the short term, dent a little bit the reputation of the firm, but it is, in many cases, the only way of making that firm survive and eventually thrive in the future. That means go back to banks, renegotiate the facilities, ask for write-offs, same is with suppliers, but here the situation is either you get a part of the debt back or the credit back, or you don't get nothing. And banks, as I said before, they will not be happy to hear this story, but in many cases they are prepared to negotiate because they are economic operators and they know that the risk is not to see anything back at all.